How y'all doing today? Well, sometimes when you are growing up and starting a family, what comes to mind? Well, we all know that as individuals, we have needs, right? So, one of those most important needs that all of us have or need when we're growing up and living is to be able to have a home. So basically, it is important, right, to understand, how to go about this process. Now, it is not simple, of course. When you are buying a house, there's many factors that are involved with buying a house. One of those factors is credit. This is like the first important factor when you look at the three important factors to buying a home. To me, credit is one of the most. Okay. Now, in order to buy a home, you must have an income, right? And not just an income, but a qualifying, good paying income. For an example, when you are purchasing a home and let's say you work and you make about 3,000 a month, right? Now, the house that you buy or what you can afford would be about 1,000 a month on your monthly expenses. So when you're purchasing a home and after summing up all the insurance, the utilities, the mortgage, all of those things must come to no more than $1,000. Okay. So you basically would want to be searching for a home that your monthly expenses to pay that house off should be no more than 1,000. Rule of thumb, you always want to get a home that you can afford, and whatever your gross income is, or your net, should I say, it should be 3 times amount the monthly expense. Just like when you're buying or not buying, but when you're renting an apartment, they want you to make 2.5 to 3 times as much. So keep that in mind when you're financing buying a home. Do I make 3 times as much is what it's going to cost to pay off the loan? Now, rule of thumb, you should at least be living, or you should at least be working at the place in which you are earning an income for at least 2 years to get a feel for if it's the right type of job you're going to be working at. Is it a career style salary? Are you having issues at your job? Is it more secure as it relates to the environment? Is it hostile? Or these are some of the things to consider, because you don't want to go and take out a loan on a house and then all of a sudden you no longer can pay for the financing cost of the monthly mortgage that you've signed up for, because that would lead to other problems. Now, this is what a lot of people don't consider when they purchase a home. Now, it's also good to have a down payment, right? In some cases, when your credit is so good, most of the time they don't require a down payment. You can literally go into a home with 0 down. but that doesn't help you purchase the home in the long run. It just leaves all of that financing cost sitting on the table waiting for you to pay it. So I always recommend, even if you qualify for zero down, I always recommend to pay a down payment on the house that you're trying to buy, because the goal is buying the house, right? Not to, push it further and back to where you have to pay it off in a longer amount of time. And then another thing is, if you can pay more and afford to pay more, then what the monthly cost on the mortgage, you should pay more, because remember, the goal is to pay off the house so you can own it. Now, when considering the cost when buying a home, there's a number of factors that you must consider. Now, right now, the market fluctuates almost like the stock market when buying a home. If the economy is doing good, then the prices are fairly reasonable on the cost of purchasing a home. And if the economy is not doing good, then the prices would reflect. Most of the time, when the economy is not doing good, the price value of the homes decrease. But the financing, interest, and lending increase, meaning the interest rates are higher usually when there's an economy crisis. So that is something to keep in mind. Another thing that is important is, when you are looking for your home, you want to make sure that the house, I would say, is not too old, that it was fairly built within the last 5 years, or if not new. That way, when you go into a house, of course, you want to have it inspected if it's more than 5 years old. And rule of thumb is to have it inspected anyways, and it most likely will. But I'm talking about you hiring a private inspector to go in and see the things that the other inspector may have missed, who works for the bank. And sometimes you can get a better rate. When you find things, you can bring that to the negotiation table when you're trying to negotiate the purchase amount. Now, another thing that we tend to run into when buying a home is, you have the house that you see that you like, and then you have your income. You're comfortable with that. And there's 3 types of loans, okay, that I've discovered that you could literally see which one works best for you. Now, there's your traditional conventional loan, which is you just go into a bank or credit union, and when you're financing a home, and you tell them that you would like to apply to be pre-qualified for a home or pre-approved, and they get all of your information: income, demographics, credit, your debts, and then they put it all together, crunch the numbers, and then come back with approval or denial, or what you may need to do to be approved. Okay. And that is your typical conventional loan. Now, let's say that you want to now, and you can also run investment property through that conventional loan, or it could just be a single family home. So either one of those things can run through the conventional loan process. Then also there is a constructional loan. So if you want to buy a piece of land and you feel that you want your home to be built from the ground up, you can get a constructional loan and you would go through the same processes. But there is a couple of differences when going for a constructional loan, far as the down payment goes. And remember, as I mentioned earlier, when you're purchasing a home, you always want to put a down payment, and the number to take account for your down payment is clearly should be considered 20%. Okay. Because as we mentioned, the 72 rule and how banks in the 10/20 rule, should I say, in the 10/20 rule, banks, they usually require 20% down before they would want to feel comfortable with giving you a loan. And when you do that, it greatly decreases your finance cost on a monthly basis. So 20%, if you don't have 20%, you're most likely to run into a lot of other issues when you are financing a home. So the recommended down payment on buying a home is 20%, no matter what the cost. If you can afford to pay that 20%, it will do you justice in the long run. So when you're pretty much applying, you want to make sure that your numbers reflect there's a debt to income ratio that they also factor in. That means any loans you may have outstanding, whether they're credit cards, car financing, student loans, any other debts that you may have on your credit. You may want to make sure that those are pretty much closed or current, because they factor in all of those things when the banks want to lend you money for financing a home. Now, the construction loan is for if you want to build a piece of property or a house, should I say, from the ground up. You can go through the construction loan process. Now, the good thing about the construction loan is that, let's say, because while the property is being built, the banks want you to be paying a percentage as the construction process is ongoing. So let's say, usually I believe like at the month of the beginning of the process, they want you to be paying 5% of the total cost of the construction loan monthly to them while it's being built. The good thing about a construction loan, it has more protection on the back end, meaning that, let's say, after the construction loan is built, you went through the process, you properly followed the steps with making your 5% payment while the construction loan process, I think it's 5 and maybe 15%, while the construction process was going, and you are in the home now, it's built, and you're making your monthly payments to pay off that loan amount. Well, guess what? If you tend to fall delinquent at some point, let's say that we forbid that happens, but the bank cannot foreclose on that home. Literally, they cannot foreclose on the home, meaning they can't come and just pull the rug from up under your house and force you to pay or leave. So that's the good thing about a construction loan. If y'all didn't know that, if you're out there, construction loans are good ways to go because it prevent banks from foreclosing. They cannot foreclose on a construction loan. So if you didn't know that, now you know now. The other type of loan is, of course, a FHA loan. A FHA loan is a government-backed loan that tend to give people who are in the lower brackets of income some incentives when buying a home, financing through an FHA. Like usually they do a little bit better on the 1% debt calculation, debt to income ratio calculation, as well as you usually have a max interest rate that could be charged on the loan. But it's almost certain that it's required that you have an escrow attached to the mortgage, as well as considering that most people who get a FHA loan tend to not have a 20% down payment. So when you're buying a home or a house, those are the three things to consider, the three types of loans that are out there. See which ones that may fit the type of financing you want. Also, make sure that the way you're going to fund the payment of the home is that your income is comfortable. You're comfortable with the place and how you're getting your income, because most likely all three of these loan types come with either two types of repayment on the loan. And it's either a 15-year or a 30-year. I recommend the 15-year because 30 years is 3 decades of paying. And yes, as you pay consistently every month, yes, your monthly go down, but that's a long time. 15 years, the downside to that is you're going to be paying more on the month that you would if you had it for 30 years, but you'll be paying it off sooner and your total cost will decrease at the same time. And also there's fixed interest rate, and then there's a fluctuating interest rate. The fixed interest rate gives you more stability and understanding that you want to have a number that you will be paying every month, and you can focus on paying that and not have prices move around, fluctuate, as well as it's that number and it's decreasing at the same time. So if you could get a fixed rate in 15 years, this is the way to go to buying a home. So 20% down, 15-year fixed mortgage, construction loan preferred. So construction loan, 20% down, 15-year fixed interest. If you can check all those boxes, this is the quickest, the easiest, the efficient, as well as the best way to own a home in today's market, economy, and the world we live in. Because right now, there's so many nuance to buying a home that you can easily miss one of the marks and end up in a bad deal on your mortgage. You know, that happened to me when I purchased my first home. I didn't know all of the steps and the rules to buying a home. And I saw a home. I was just starting out. I was just actually graduating from college, and I was just starting my family, and I literally didn't know all the steps or the process to buying a home. I just knew that there was a house I wanted, and I was going to go out there and get it. And as I was learning along the way that it's important to understand what you're signing, because at closing, I didn't read through most of those documents. I'm just signing away. And next thing you know, I'm locked into this 30-year mortgage, which I don't know how I'm going to pay off. Actually, I knew how I was going to pay it off, but I didn't know all the other nuances that are tied in with what escrow really meant, what a higher interest rate. I was paying, I believe, like 5.3% interest on the loan that I got, as well as being comfortable in the place of work that I worked. And 30 years is a long time when you're dealing with paying back a mortgage. And so, and then, let's say something happens at your employment. Now you're sitting there like, okay, what's my next move? How do I continue to pay for this mortgage that I got into? So, and then not to mention, let's say you do lose your home and it's foreclosed. Well, guess what? They don't tell you. Well, for one, you're going to ruin your credit. They're going to take your home. Okay. They're going to auction it off or sell it to someone else, depending on how they want to do it. All the money that you put into it is lost. You don't get none of that back. So all the equity that was put in the home is gone. Okay. Not only that, you got to find your next move, far as where you're going to be staying or whatever. Your credit score drops all the way down, maybe about 400 points or more, and it's on your record for 7 years or 5 to 7 years, and no one is going to touch dealing with you. Far as if you want to get an apartment, they're going to just say no. If you want to buy another home, they're going to just say no. So in other words, it's almost you're getting punished for not being able to follow through on the mortgage you signed up for, or let's say the loan that you signed up for when you bought a house. So these are all of the things that a lot of people don't know on the backside, the negative side, the process, choosing the right loans, as well as successfully completing it. And if you compile all of those things together, then you clearly can see how you could easily make a mistake in the midst of the market and the concept of buying a home. So through all of my experiences, I learned those things that I just told you earlier. Constructional loan, 15-year fixed, 20% down. If you do that, you're more likely to be successful in your journey to buying a home. And I wanted to share this with you. So when you're going out in the market to buy your first home, for you first time home buyers, consider this, because it will help you tremendously not to make mistakes when buying a home, and then what to avoid when you're in a home. That way you don't end up being screwed for 5 to 7 years. And I hope this helps you guys, and see you next time on Global News Podcast, and have a great day.